Hi, so welcome to this evening's webinar. I hope everybody's well and enjoying life as best they can with this COVID-19 still hanging around. In this evening's webinar, what I'm going to cover is a few topics to do with Tekton that's sort of going to hopefully clarify a few things. So the first thing we're going to cover is what period should we use to test and backtest your strategies. What we're also going to cover is what to do when backtests show negative results. And when I say negative results, I don't mean negative results overall, because if you get a strategy that you test and you've created and you've edited it and you've tested it and it's given you a whole host of red, then the chances are that's not really going to be a strategy you could edit considerably to get it to be profitable. Overall, the strategy or the algorithm that you've created on Tekton is not going to work. So we're talking about periods of your longer term backtest of negativity. So we're going to cover off how that works today. I'm going to show you how I create stuff, how I edit stuff, and how I look to see if a strategy or an algorithm that I've created is likely to be a successful one at optimum settings by using the settings I initially backtest on, if that makes sense. We're also going to look at a couple of strategy setups, how I look to create a strategy. And again, this isn't to give you strategies to use. The whole purpose of Tekton is to create your own algorithms. This is the whole ethos behind Tekton. It isn't behind giving you a copy service right now. It isn't giving you strategies to use. Tekton is a platform that allows you to create your own. So I know people say to me, "Oh, Mark, have you got any strategies I can use?" Well, you know, that's okay. We do have that. However, in my opinion, and please don't take this the wrong way, it's not being proactive. That's being reactive. Anybody can create a good strategy. In fact, one of the best strategies that I've seen on Tekton is one that I didn't create. It was created by somebody else who had a lot less experience in the industry than I did. They sat there for a few days and created a strategy that really produced good results. So you can create your own stuff. Just spend a day a month or half a day a week or whatever it is, just writing and re-editing strategies, because you've got the editing facility in Tekton to use to be able to do that, to find what works for you. And I'm also going to answer the question that everybody asks me when I first talk to them about Tekton, is the golden question: does Tekton make money? So without further ado, let's get cracking and get into the topics that we're going to cover this evening. Okay, so what we're going to do here is we're going to show you how we've created a algo on Tekton and the blueprint behind it. So those of you that have watched my previous webinars will know that when we have the think it, build it, test it, trade it options, this is the think it part. So the simple strategy is an RSI cross, or an RSI position. So it can be one of either. So we have price action at the top on a 15-minute time frame. This is Euro Yen. This is a 15-minute chart. So as you can see, if we scroll back, we can see we've got a 15-minute chart. Now, the ethos behind this strategy is oversold, overbought. So for example, when this line here, the blue line you see at the bottom, which is the RSI, relative strength indicator, is in a oversold position, we're going to see moves back up, i.e. there. So we're capitalizing on that move there. When it's in an overbought position, here, we're capitalizing on that move, which isn't as strong. But remember, and I want you to remember this, no strategy has a 100% success rate. That is the thing you need to remember. Anybody that promises you a strategy that has a 100% success rate is either not telling you the truth or has a ridiculously high drawdown, because they would leave the trade running until it did become a winning trade. And if that makes sense, you'll understand the thing is, by doing that, you're going to have high drawdowns, because you could be in a position where you're in a trade which is like 200, 300, 400 pips down. What's that doing for the drawdown of your account? So the idea is to get into the market early. If the trade isn't going the way you want it to, get out, which is why we have small stop losses and larger take profits. So the whole ethos behind this strategy here is oversold, overbought. Here, oversold, we're buying. There. Let me just auto this so you can see it clearly. Okay. Look at this one here. Okay. Oversold, nice long move. Overbought, small move. So usually behind this theory is the fact that when the RSI is in an oversold or overbought position, we can then take the move in the opposite direction. That's the ethos behind the strategy. That's the think it part. Euro yen, 15-minute time frame, RSI, and the settings on the RSI, if we click there, are 14 period. So notice we have the scale up the right hand side here. So the RSI scale is ranging from 0 to 100. But it has this optimum sort of mid-range setting of between 30 and 70 or thereabouts. So this line here is 70, this line here is 30. So you can call it overbought or oversold at whatever level you want. It rarely goes well below 30 and it rarely goes well above 70. But as you can see, if we go back, we can see it's well over 70 here. And it's well below 30 here. So it does move about considerably. And remember, this is only a 15-minute time frame. So this particular day you see, or this particular time frame you see here, is probably about 2 days. Each candle is 15 minutes. So let's get over to Tekton and show you exactly how we can then write this strategy, how we can create this strategy, and then show you how we can backtest it over effective time periods. Okay, so here we are on Tekton. I've created the algorithm. I'm not going to go through the creation of the algorithm, how to create the strategy, as you should all know how to do that. You can either use an import code, which the import code for this strategy is on the forum, or you can add algorithm and add the algorithm yourself. So this particular buy condition, as you can see here, is if the RSI 14 period is less than 32, we're going to buy. And the sell condition is if the RSI 14 period is greater than 68, sell. Now here's a word on how to risk manage this. Please remember, when you are risk managing, for backtesting, you don't need to worry about the trade size. That's this one here. It is only applicable for live trading, when you're actually trading and starting to run this live. The trade stop loss and take profit can be anything you want. Don't always just use the settings that we've given or we've provided in the strategy. Edit them around to see what you can get out of the strategy. For this particular one, we've got a trade stop loss of 18 and a take profit of 72. That means our winning trades are 4 times the size of our losing trades. We will get losing trades here. In this backtest, I'm sure we're going to get a lot of losing trades, considerably more than the winning trades in number. But the take profit is bigger. And this is the theory about taking a trade and getting it to run if it's profitable, but get it to lose. If it's losing, get it to close quickly. And this is the whole beautiful ethos about reward to risk management. I do have strategies that have 1-to-1 reward to risk. This one is 4-to-1. You can choose the currency pair Euro yen, we're going to do this on Euro yen and the candle period. But once you've back tested your strategy and your algorithm, edit it, change it to the whole, any one of the whole list of instruments you've got, so you can then edit it again, because the Tekton keeps you a history of all your tests. So you can see and go back and look through all of the history of your tests that you've done on that algorithm to see which one works for you. A quick word on the strategy drawdown and strategy take profit. This is applicable to your overall strategy. Whereas this here, trade stop loss and trade take profit, applies to each trade Tekton places for you, this here is the overall strategy drawdown and strategy take profit in pips. So for example, if you back tested this and set both of these to say 200 or 300, and you back tested that now, and I'm going to back test it in a moment using this setting, Tekton will test until you've got a 300 pip take profit or a 300 pip drawdown from zero. So this is useful because if you've got a particular algorithm you're running and you have a little bit of an aversion to risk, or you want to take the profit if it appears, this will allow you to do so, because you can use this in your trading live as well. So we've set the risk settings. Don't worry too much about the trade sizing on back testing, but make sure you trade size correctly if you run it live. So now I'm going to click run test. I'm going to scroll down. I'm going to test over all data. I'm going to run the test, and I'm going to see exactly what happens. Here we can see the results as they come through, and here we will see the chart. Okay, so now as you can see, it's testing over the whole data that we have starting in 2017, and it's actually now stopped testing. It's just tested for 14 days, and the reason it's tested for 14 days is because of this number in these boxes here. The strategy drawdown 300, strategy take profit 300, and notice it's now taken a profit of 300 pips in just 14 days between the 5th of January and the 19th of January. It took 33 trades, 10 winning trades and 23 losing trades. But that was the winning trades there, and that was the losing trades there. So it loses more trades than it wins because it's using the, if the losing trade is running, get it closed out and keep a winning trade running for longer. So you can see from that, and you can see also the trades underneath here, winner, winner, loser, 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 winner, winner. So this is, every one of these winners is 4 and every loser is 1. So that's 4, 8, 12, 16. Take off your 1, 2, 3, 4, 5, 6. You're left with, if you was risking 1% on this particular one strategy, you'd be 10% up in those particular trades just in that period there. Because you've got 1% loss here and a 4% win here. 1% loss, 4% win. I'm hoping everybody's understanding that, because the wins are 4 times in volume of the losses, in actual volume, not in number. The number, if this was all 1-to-1, this would be a losing strategy. So we're now going to retest this, but I'm going to change the strategy take profit, and I'm going to increase it to 1,000. So I'm going to increase it to 1,000. Give it time to run, if that makes sense. So let's click run test again. And now it will do the same test again, but this time it will run until there's a profit or a loss of 1,000 pips. So we've now gone behind the 19th of January. Now it's gone beyond. It's now up to February. And there we go. So by the time we got to March, okay, the end of March, so that's 3 months. This particular strategy, this particular algorithm has made over 1,000 pips of profit. Notice there, it pulled back a bit. It pulled back probably nearly 200 pips there. But that period there was only probably about 6 or 7 days in there. And this is something you need to be aware of. Strategies do not just go up in a straight line. Trading systems do not go up in a straight line. They do pull back. So you need to be aware of that when you're trading. So 1,000 pips, as you can see, it's only got this one running for a month. So let's open up the floodgates a little bit, and let's change this now to say 3,000. And for the take profit as well. We know it's not going to get to a strategy drawdown of 3,000, but we'll still change it anyway. Let's click run test again, and let's see what happens here. So we know it gets to 1,000 by March. Now we want to see when it gets to 3,000. So now it's up to March. It's now climbing. It will climb a bit more now, hopefully, because it's now going beyond March. There we go. Two and a half thousand pips. There we go, 3,000 pips. So it's hit 3,000 pips of profit in 6 months. And again, there are still pullbacks. Guys, you have to be aware of pullbacks. And I do appreciate when someone says to me, but Mark, if I'd have started this strategy there, it would have lost money before it made money. But this is the whole purpose and ethos of having the ability to backtest and look at how successful your trading strategy is, not just overall, but in periods and pockets. If it's made 10,000 pips over 3 years, but it had a drawdown of 300 at some point, that isn't a bad thing. That isn't a bad thing at all. That's a fraction of it. If it was a drawdown of 1,000 pips in one hit, then that's a 10% drawdown. But we're talking a third of that. We're talking a drawdown of around 2 or 3%, 4 or 5 at a push, which is not bad at all. Any strategy that's got a drawdown of, say, 4 or 5% isn't bad. That's pretty good. But I do understand you may be joining that strategy at the period it begins to draw down. Now let's open it up a little bit more. Let's now make this, say, 5,000. 5,000 pips. So we're now saying to this particular algorithm, keep testing until either 5,000 pips of profit or 5,000 pips of loss. So we click run test again, and let's see the result that it gives us. Just waiting for the figures to come through. We know that it gets up to 3 within the first 6 months. So let's see how it tests now. You know, there are small pullbacks, I do agree, but overall this is a profitable strategy, a profitable trading system. And when you're using this in conjunction with others, and obviously bring your risk management down, because if you're running 2 or 3 strategies at one time, remember to bring your risk management down. Okay, so this is 8 months. 8 months it's taken to get to 5,000 pips of profit. 425 trades, 141 winning trades, 284. So what I want to do now is I want to backtest this. I want to backtest this over, if I can, the whole period. So I'm going to really open the floodgates now. And I'm going to put in here 10,000. I'm going to click run test. and I'm just going to let this one run. Okay, because clearly this strategy has a good profitable return, and it's going to now test the same data. It's all the same data it's testing, but when it gets to a ceiling or a drawdown of 10,000 pips. And I'm hoping this will go a little bit longer than the 6 months or 8 months that we've had already. It's done 6 months already, and as you can see, the backtesting engine is really, really quick. It's done 6 months or 8 months already, and it's climbing. So up to 5,000 now. And it's still climbing. It's up to 7,000 almost now. And still climbing. 8,200. We're now into 2018. And it stopped at March 2018 at 10,000 pips of profit. There. 864 in total, 284 winners, 580 losers. Not really much drawdown, only a bit there and a bit there. But generally speaking, that was a profitable trading system. Now, most strategies, when you're testing them, and most of you watching this, if not all of you watching this, have tested strategies at some point, will know that most of them go for the whole duration. So I've picked one here that has a particularly healthy profit loss ratio, particularly healthy profit return, that isn't actually reaching the full distance. So I want to just test it on another instrument, just to show you what I mean by that. So let's look at dollar CAD. Okay, so let's run the same strategy, but this time on dollar CAD. And to do that, you just change this currency pair in here. So let's run the test. Scroll down, and let's see what happens when we test it on dollar Canadian dollar. Okay, it's the same 10,000 pips of profit or drawdown. And as you can see, it's not too dissimilar. It's still the same. We've tested for 3 months, but this time we're going to let it. We're not going to go through the stages that we tested the last one. We're going to go through straight for 10,000 pips of drawdown or loss. So right now it's done 7 months. Let me just scroll down so you can see that. So it's done 7 months, 8 months, and it's quite a profitable trading system in the time we've tested so far. Okay, up to October at the end of the year now, and we're up to 5,000 pips of profit. So 5,000 pips in the 1 year. Now remember, just because a strategy makes 5,000 pips in 1 year doesn't mean to say it's going to make 5,000 pips in the second year. Back testing is no guarantee of future performance. I must make that very clear to you. It's an indication that the algorithm you're working with has a good degree of success. And if you can adjust the settings and adjust the risk management, you can maybe get it to be more efficient. So, for this period here, for the 3 months, it's still increased, but it's sort of hit a sideways spell, as you can see here. So from the beginning of 2018, which is about here, to looks like the end of 2018, it's sort of gone sideways. So in a moment, I'm going to test this period. I'm going to test just the year of 2018. I'm just going to test that period, because then I can see at what points this particular strategy and trading system slows off a little bit, and it gives me the ability then to work around that. And knowledge is power in this instance, because you can then adjust your strategy. It's still over a period of, say, 2 years so far, 3 years or 2.5 years, 6,000 pips of profit on one instrument, on one currency pair, is still pretty good. Because I've seen an awful lot of trading systems that are red permanently. They start red and they stay red. So this one's now starting to put in higher figures, as you can see. It's over 6,000 now. But it is, I agree, a little bit more sideways here. Okay, a little bit more sideways, and it has had a little bit of drawdown. So if we test in a moment, when we do this test from 2018 through to the end of 2018, we will see this period here and the results that gave us. So this one over the period has finished testing up till today's date, and it ended up higher than it was at any point. If we drew a line across there, it's probably higher than it's ever been, and we got 6,300 pips of profit. So it's a profitable system. It did have a little bit of drawdown there, a little bit, which we need to be aware of, because the last thing you want to do is set something to run live and not be aware it may have a losing spell. We have run systems live, algorithms live, and they've had 4, 5, 6 losing trades on the spin. Some of you have experienced that, and you've said to Mark, you've sent me a message, Mark, why is this trading system that I'm running now having 4 or 5 losing trades on the spin when it's a profitable system overall? Remember, you've got a lot of losing trades in these, guys. You've got a lot of losing trades in these higher reward to risk system strategies. 6,336 pips of profit overall, 500 winning trades, 1,600 losing trades. But overall, it's over 6,000 pips up. And if you're trading that at, say, $5 or $10 a pip, you work the maths out yourself. One strategy, one instrument, and that's just on dollar CAD on a 15-minute time frame. You can change the time frame. You can change the instrument. Tekton is so flexible in that respect. It will give you the ability to do so. Let me show you in a moment what we can do with a higher reward to risk system, and now compare it to a lower reward to risk system. Let me show you a strategy that uses a one-to-one reward to risk. Okay, so here we have an algorithm. It's a different algorithm now completely. It's one we've already pre-created. And all of these strategies you can see on our forum, so you've got no reason why you can't use these yourself. But as I say, you create your own. If you create your own and different versions of your own, then that's great, and you can duplicate these. So if you go back to your home screen and just click duplicate on one of your strategies or algorithms, it will create a copy of it. So you can have one running live or one master, and then edit the others and save them with the name. Just click the save button and rename them to whatever you want. This one is the commodity channel index indicator. So it's using a commodity channel index. So it's very similar to an RSI, but slightly different. Works on commodity based currencies. And this is one where the commodity channel index crosses below 150, we're selling, or it crosses above the minus 150, we're buying. The number ranges on the commodity channel index are slightly different to the RSI, but in essence this is one and the same type of strategy, using oversold and overbought levels to get in and out of the market. We're using it on Australian dollar, US dollar. Australian dollar is a commodity based currency. What I mean by that is it's very heavily linked to the value of high iron ore and copper and other commodities in Australia. Australian dollar is commonly known as a commodities based currency because of the previous reason, the link to the commodities that are produced and used in Australia. That's all you need to know, really. So yeah, the stop loss and take profit here, whereas previously it was 18 and 72, here it's 25 and 25. So the reward to risk here has to be 1-to-1, and it has to have a greater than 50% success rate to be successful. As soon as it drops below 50% success rate, i.e. winning trades compared to losing trades in number, this strategy will not be profitable. So the gearing on this is completely different to the previous one. We're going to get the number of winning trades and losing trades closer together. More winning trades, less losing trades compared to the previous trading algorithm I showed you. The other one was heavily number in loss and less winning trades, but the volume, the actual volume of those trades was higher. The number, i.e. how many, was geared heavily towards the losses. Here I'm going to see a different result. So let's run the test and have a look. 5,000 pips of drawdown, 5,000 pips of take profit. Click run test. Let's see what we get. I'm going to test over all data. So this is the button to test over all data. If we want to test specific days, we can do that here on a subsequent test. Click run test. Let's open these little windows up and see what we're going to get. So as you can see already, we've got trades, higher number of winning trades. We've got losing trades. Okay, so the winning trades here and the losing trades, as you can see, there is a relationship. There are more winning trades than losing trades. And somebody with a higher adverse to risk and doesn't like to lose trades might be more favorable to a system like this. But as you can see, it's profitable, but there was a drawdown there, as you can see. A little bit of drawdown there. And you need to be aware of this, okay? You need to be aware of this. Generally speaking, this trading system looks to me like it's profitable. It's going up, like so. But when you test it on another pair, or another instrument, or another time frame, you might find that the whole thing goes the opposite way. Now, as you can see, it's hit the top here, and it's a little bit going a bit sideways. I'm not saying to you to trade this. I'm not in a position where I can say to you, trade this strategy now. You don't have to. I'm just giving you examples of profitable systems that we've created on Tekton that have produced good backtesting results over the long term, and be aware of where they are when it comes to pulling back. So for example, this one hit a peak of almost 4,000. Now it's down to just above 3,000. So had you joined it here, you could have taken all of this loss here, but you wouldn't have done, because your strategy drawdown, if set correctly, would not have let you do that. It would have cut you out around here. I'm hoping that makes sense to everybody. Overall, this is making a good, strong, positive result. More winning trades than losing trades. And that's all you asking for in a profitable trading system. That in the long term, it has more winning trades than losing trades. If it has more losing trades than winning trades in a one-to-one reward to risk, then it's not one you could possibly even work with on this type of scale. As you can see, it's pulled right back. It has pulled right back. So if we tested over this period here, from say the 1st of January 2019 to the end, here, we could safely say that that would be a loss. In fact, I'm going to test it for you. Overall, 850 pips. So as you can see, on a one-to-one reward to risk, it has more winning trades than losing trades. It is a profitable system overall, but you have to look at the periods of that. So let me test now from beginning of 2019 to date. So giving you 2 years of test results. So there, we go to here and we click back till we get to January 2019. I know what the result's going to be. It's going to be a negative, a big negative. But let's see. So here we go. Slightly different chart now because we're limiting it down to a specific time period. So we're getting more condensed testing results here. Okay, we're getting more test results on a closer time frame. So if you're looking at this, you can say, well, look, generally speaking, here it's around 50-50 success rate. So it's not a huge loss, but let's see what it comes out at the end of the testing period. As you can see, you know, it's now in a little bit of drawdown. It's actually still quite close together here. Still quite close together. You know, it's not 50-50, but it's not a million miles apart. Okay, so now we're getting towards the end of the test. And that should give us the result any time now. The word trades, when it appears here, is the end of your test. You know once the test is ended because the word trades appears just down the bottom left here. And as you can see, 2,300 pips of loss. 559 winners, 653 losers. So that gives you an example of a strategy that has overall a healthy period of testing, but there is pockets of drawdown, and that is a big drawdown. That's a high drawdown there. That's a high drawdown. So use the strategies we're giving and the strategy examples we give to play around with the system. Okay, so at this point you could say, well, let's go to a 30-minute time frame. Let's change leave the stop loss at 25, but let's change the take profit to 50, and let's run that. So we've now amended the time period, and we've amended the stop loss and take profit. Now some of you might be thinking, well, hold on a minute. Why am I doing this? This takes time. I thought algo trading was supposed to save me time. Well, let me play devil's advocate for one moment now. Manual traders have to do all of this and trade manually too. So you are really halving your workload, if not slashing your workload, because you're working smart as opposed to working hard now. It's not about using time and let more of it or less of it. It's about using the time you have productively. So we've now got to a stage where we're spending maybe a day. I spend a couple of 2 or 3 days a month solidly testing stuff, testing new indicators, testing new strategies. Because I know the trading is going on in the background, and the coaching I'm doing for you guys and the creation of new stuff for Tekton moving forward takes up a lot of my time as well. But 2 or 3 days solid per month I spend testing strategies, testing indicators, and testing new versions of stuff that really come into the forefront. You know, we're living in a world of creation. We're living in a world of creation of, if you like, new technology, and I'm spending a lot of time doing that. So let me now test this over all data. Okay, so over the period of the same time period we tested with a different reward to risk, where we had a 2,000 pip loss, we had a 700 pip loss here. So the drawdown was only small compared to what it was previously. So let's run this over all data now. So we're going to run this strategy with the new settings over all time frame data. Okay, so here we go. So this, remember now, is a 2-to-1 reward to risk. 50 pip take profit, 25 pip stop. Okay, so now we're letting this run. Let me show you the dates at the bottom. 6 months done already. So those of you that have come from other trading platforms, some of you I know are brand new to this, and remember that if you are brand new to trading, Trading for Beginners Workshop is now available at a ridiculously low price. It's a 4-hour workshop online, where I've condensed everything that we used to teach over 3 days into a 4-hour online session, and that gives you the ability to get yourself up to scratch, and includes how to use Tekton effectively as well. But those of you that have come from other trading platforms, you know, you've used maybe MT4 in the past with some expert advisors, you'll know that the back testing you're seeing is pretty rapid. I mean, that's now done 18 months of back testing. So 18 months of back testing in about a minute is very, very fast. We're up to, you know, almost coming to the end of 2018 now. So we've just adjusted the settings on this strategy. You know, by changing the strategy settings, you can adjust the results. So we've used a different time frame, we've used a different stop loss and take profit. All we're doing now is testing that same algorithm over the same period to see if we can improve that drawdown it had at the back end of this. Okay, that's why when we post strategies up for you on our forum, we're not saying to you, trade this. That's not the message we want to give you. The message we want to give you is, look at this and make it better. If you can make a strategy better that you've been given the nuts and bolts of and improve it, that's better for you. And ultimately, once we get to a stage where we could potentially bring in copy trading services and people can buy strategies from you, and you can create some really cool super algos based on the ethos that you've understood from these sessions, and you can make money on that as well, how good would that be? So as you can see, you know, the drawdown's not so bad. It reached at almost 2,000 pips, and it's now down to 575. So it's going to end up, you know, that drawdown wasn't so strong down here. So it might need a little bit more retweaking. It might need to be looked at on a different instrument. But this is the whole beautiful thing about Tekton. It gives you the ability to look at an overall picture of trading systems and how you can capitalize them for yourself, how you can capitalize on a trading strategy that actually makes money over the long term, and at what periods it's going to draw down by. Okay, so as you can see, it reached a peak of 2,000. It ended up around 600 or thereabouts, I would say. Yeah, 650. So we know that this particular strategy may need retweaking. We can edit this, so we can go to here and edit this and go back and change the number to 120. Click apply, update, confirm. Let's change the number now to 120. Click the here and put 120 in there. Minus, of course. Don't forget the little minus. Click apply, update, click confirm. So now we can backtest that again over the same period to see what the result is compared to what it was with the previous settings. It may be that having the 120 instead of the 150 gives us a stronger result overall and adjusts our drawdown. So this reinforces the message we want to give you users at Tekton, and we're getting more and more people coming into the Tekton family by the week. We've got CCI Trader clients now coming in. So we've got a lot of you guys from CCI Traders now, which is a brokerage in Africa, and they're using this now. And you're finding that you're getting lots of useful information about strategies. And you're finding that, you know, find your feet. You're going to find that you're going to be able to have time to create stuff. Use what you've seen as benchmarks and try to improve it. It doesn't mean to say if you see a strategy and a code for a strategy, you've got to keep it like that. You can duplicate it, you can edit it, and try and enhance it. And this is the whole thing behind you. And I'll happily jump on a call with any of you to help you with that, because this is all about teamwork. Tekton is, the meaning of Tekton is Greek, and it actually means artisan, creator, artist, carpenter. It means someone who creates. That's the word Tekton, what it means. And this is what this is all about. It's not all about copying and just sitting there and just taking someone else's work. It's about creation. The most innovative works in the world is what people have created, and we may have some really super cool algos sitting out there in your heads that you can bring in and really help to grow businesses that you're running from home. So this one's actually running. We've changed the test settings. I'm not saying it's going to work. I'm not saying it's going to be better. We're going to see. But by changing the number here, it can really help you with your trading results that you get and just work it until you find the optimum settings. But use the ones we give you on the forum as bases. Don't use them as gospel. And this is what I want to try and get across to you guys. Don't use them as gospel. Use them as a base. Okay? Okay guys, so here's another one. This one is a moving average cross. So we're using the cross of two moving averages here. Now, we've got a strategy drawdown, take profit at the 5,000 default. These are 5,000 pips of default. The stop loss is 20, the take profit is 60. So we're running this at a 3-to-1 reward to risk. Okay, I'm going to run the test. It's euro dollar, 15 minutes, test over all data, run test. Let's see what happens. Let's see what the result is. Okay, I've tested this on the other settings. I just want to see what this one comes in at today. So we've run this at a higher time frame, we've run this at a lower time frame. We've also run this with different stop loss settings and take profit settings. So right now it's starting the strategy. It's done 4 months already, and as expected, the winning trades in number is lower than the losing trade, purely and simply because the reward to risk is higher. So every take profit is 60 pips and the stop loss is 20. So the trading system is geared around winning trades being 3 times the value of a losing trade. Okay, so now it's starting to take into its so it's made in the first year 400 pips. Okay, so it's made 400 pips in the first year. Okay, now it's started to test, and it will start to should gather pace over the coming year. It's now halfway through 2018 and now back on its upward movement again. So yes, during this time you could see there was a drawdown there of 2 months. So a drawdown from 400 down to probably 200. So a 200 pip drawdown there. But overall, it's still a profitable system. But let's see what the total result is likely to be. We've now almost carried out 2 years worth of back testing. And again, you know, it's profitable. It's green. We see lots of green. So we know we've got a good base to build from. If this was all red when I first start, and when I first start a strategy, I test it 1-to-1. 20 pips, 20 pips to see the relationship between the winning trades and the losing trades. And I'll show you that in a moment, how I do that when I create a new strategy. Because once I've created a new algorithm, I want to see what it's like at 1-to-1. And if it's a huge loss, then I know by adjusting the reward to risk, it's not going to have any chance of bringing it into profitability. But if it's not that far away on a 1-to-1 between the reward to risk and between winnings and losing trades in number, in frequency, then I know by adjusting the reward to the risk, I can potentially get a much stronger return when I test it over a longer period. So this one's now over 1,000 pips. It's climbing. So it's had its drawdown here, but throughout the period of 2019, it was a very strong result. So it's good to be aware of all this sort of stuff when you're building your algos. You know, remember, you're not just relying on just one algorithm. Don't just rely on one. Have about 6 or 7. You can run them depending on the region you are in. And I know we've got people from all over the world watching this evening and the recording of this. You're going to find different brokerages in different regions will offer you different leverage. So some of you will be able to run 3 or 4 or 5 trading systems at one time. So have them there to help you. This one's finished testing. 1,600 pips of profit overall. Good healthy profit over the last year. So that's looking like that could be on the climb. Let's adjust this now. So let's change this to 25 and 75. and run the test again. Let's see what that brings us. So now we've just adjusted the reward to risk ratio slightly. So each trade is either a 25 pip stop or a 75 pip take profit. And we'll see exactly what happens there. So up to 8 months almost now. So, while we're waiting for that, Tekton is there for you to build on. Don't see it as a the strategies as totally reliable, and to totally rely on them, I should say. Use what you see as a base. It gets you started rather than leaving you completely open and don't know how to get started, don't know how to create a strategy. That's why we added the import function, so you could import an existing strategy to see what it looks like, and then you can edit it yourself. When you look at home decoration, interior design, you don't just look at creating somebody else's work and mirroring it. You adjust it to your own tastes, and that's why Tekton is the same sort of thing in trading terms, because it allows you to tailor make a strategy using your own flair. For example, this strategy uses a 50 and a 200 moving average cross. You might want to try it using a 58 and a 180, and you get better results. And if you do, and it gets super results, later down the line, when we have a copy function facility, you may be able to benefit from that financially. So the whole thing is geared around flexibility and usability rather than just relying on copying. Let's go back to the test. The test, as you can see, is still pushing up. We've still got about 18 months of testing to done. So far, it's 1,375 pips and climbing. So it's a great system, and remember, guys, you've got access to a great team of people. We've got a new member of staff now in the team who's going to be on the forums helping you, Harry Joseph. He should be watching this evening. He's there to help you answer any questions you have. He's going to help us with customer service, etc., and take it from there. So, I'm going to cover off the quick last question while we're waiting for this backtest. Does Tekton make money? And yes, it does. It does allow you to make money. But what the more burning question you should ask yourself is, what does Tekton do? Does Tekton make money, or does Tekton give you the facility to create your own algorithms? And that's the difference, okay? There are many auto trading systems out there in the world that will claim to make this and that and that and this and this and that, and they're not flexible. They will just be trading something that somebody else wants you to trade. I came across one at the beginning of this year called Auto Trading Forex. I joined it. As a demo user, and at one point I had 25 open positions on euro dollar. And I contacted them to ask them, why is this? What is this all about? And they said to me, if you don't like our trading style, we'd suggest you don't use it, which is fair enough. But I asked about the risk management settings, and they said there were no risk management settings. The system just turned strategies off and on. Trading positions were closed and opened as they saw fit. And I said that was open to a huge drawdown. I'm talking about thousands and thousands of pips of drawdown. And within 4 months, they had closed down because they were unable to keep the thing profitable. So Tekton is your pocket quant. It's your trading system. Tekton is your system to allow you to trade what you want to trade whenever it sets up. Okay, and that's the thing to remember. This test is finished. 2,350 pips of profit. Reasonably good profitability overall, long term. Good, reliable system. Makes money, generally speaking. 2,500 pips almost in the time period. I like the look. Okay, so the last thing I'm going to show you, and I apologize for the abrupt ending of that last clip, is where to start when you've created an algorithm and the strategy, and where to backtest it and how to start backtesting it effectively. Rather than just go full pelt into this and just test over different systems, settings, because you want to try and get the best out of it. The most effective way I found of backtesting is to do the following. You've got your algorithm here, buy and sell. Don't worry about the settings on this. You've got your currency pair, you've got your time frame, and you've got your drawdown and take profit. Remember, this strategy drawdown and take profit is the number of pips that the algorithm will run for until either 1,500 pips or 15,000 pips in this case of loss net, or 15,000 pips of profit net. Trade size is not really relevant for the backtest, but this bit here, trade stop loss, trade take profit, keep these the same number on your first backtest. There's a reason for that. Trade stop loss, the same number as your take profit. So you're adopting a one-to-one reward to risk. Whatever your risk is, the reward is the same size. Backtest it over that period, over all data, run test, and then see the results you get. And there's a reason I'm doing it like this, and there is a reason. And the reason is because I want to see how the strategy performs at a one-to-one reward to risk, and how close to a 50% success rate I can get. Now, if I can get, say for example, a success rate of say 25% winners to 75% losers, then I know that the strategy that I've created and the algo that I've created and the settings I've set it up with and the instrument and the time frame, it's not even worth adjusting that. You can try another instrument and another time frame, of course, but the actual algo itself on that instrument isn't really that profitable. In fact, it has a huge loss ratio to win ratio. Now, if you look at the one we're testing this right now, it has a lot more winning trades than losing trades. So it has a much greater than 50% success rate at a one-to-one reward to risk. Remember when we did some testing earlier where the losing trades in number were higher than the winning trades in number. But in real monetary terms, the winning trades made more because the reward to risk was higher. Now in this instance you're looking at now, it's a one-to-one reward to risk. 25 pip profit, 25 pip stop. So it has to have a greater than 50% success rate for it to be a profitable trading algo. Forget the drawdowns, forget the peaks and troughs. A strategy that has a greater than 50% success rate at one-to-one reward to risk will be profitable. But it's how close these numbers are to a 50-50 success rate or better. If you get something that has, say, 40% winners and 60% losers at one-to-one, then you can adjust the reward to risk to a 3-to-1 or higher on the subsequent test to get that profit and loss up a bit. So right now, as you can see, we've got 340 plus trades. Over half of them are winners. And that's why we've got a profitable system. Yes, it's pulled back here, but this is only to show you an example of what I mean by having the success rate of the strategy being better than 50%. So I know that this particular strategy right now, had it stopped right now there, I know at 50% success rate, it has a one-to-one reward to risk, it has a greater success rate than 50-50, which is what it's got, and it's looking like it's going to continue to have, but we'll see what it's like when it finishes. So once you've done this backtest, you can then change this here and just change it to 1.5 to 1. So just change that to say 25 and 40 to see what difference that makes. And once you find your optimum settings, you can then use this as a base, duplicate the strategy by clicking the duplicate button, and then edit the other ones and test on the other duplicated strategy. Okay, so we're almost 3 years worth of tests now, coming to the final year. Well above 50% success rate. The winning trades in number are much higher than the losing trades. So we'll see what it's like when it's actually finished the test. And then we can make a decision as to what we would do next. So again, it's a profitable strategy. Lots of 50-50 success rate systems do have issues. So we've got as you can see, we've got a successful strategy. So what we could do here is we can now go back. We can look at the trades here. Okay, so each losing trade, winning trade. Okay, so it's a bit of a neutral sort of result. So let's go back up now and show you what I mean by not editing. So you could go here now, change that to 45, for example. So it's not quite double, and run that test on that. So click Run Test. The Run Test button will come up, and then that will test the same algorithm over the different reward to risk settings. So our winning ratio compared to our losing ratio will now change. It will widen. It will widen. I expect possibly to see more losing trades in number than winning trades, but remember now, the winning trades are a much higher in monetary terms. As you can see, it's starting to grow now. So we've got 16 winning trades. No, it's an ever-changing number, this, but 19 and 12. So it's greater than 50-50. Even better. So if you've got a greater than 50-50 success rate on a higher reward to risk, you're going to get a very positive result. Very positive. Because all of your winning trades are more than 1.5 times all your losing trades. So this one particularly in itself could be quite a good result. So again, you know, the win-loss ratio 44-22, it's double. So it's 66-33%. So it's a 66% success rate right now on a more than 1-to-1 reward to risk. So this is good because you've got a good base to build from on the 1-to-1. If you had a 1-to-1 reward to risk set up and you had 3, 4, 5,000 pips of drawdown and it was 35-65% success rate, then you probably wouldn't want to run anything like that whatsoever, because it simply wasn't going to give you the result you wanted, because it didn't have a good base. And remember, all of the algos that you're creating are based on giving you a good base to build from, not something just to copy and sit back and do nothing. Build on the base you're given with the algos that we have and edit them. Edit them. Edit the instrument. Edit the time frame. Edit the settings. So now it's pushing up nice. It's still got a greater than 50% success rate. And we'll come back, we'll let this one test and we'll have a look at the result in a moment. Okay, so we've completed the test at the slightly higher than 1-to-1 reward to risk, as you can see. And we had an overall total number of trades of 323 and 137 winning trades and 186 losing trades. So we had more losing trades than winners. We did get a positive result overall, purely and simply because of the fact that the winning trades were higher in volume, higher in numerical or monetary terms than the losing trades, only by 1.5 or so, not quite double. The success rate, if we look at 323, so if that was 40% of that, that would have been around about 130, 128, 129 trades, it's actually higher than that. So it's well above 40% success rate and just under 60% loss rate. But remember, the risk to reward is different gearing. And this is why I said to you earlier, is when you're trading and testing strategies and algos, start them on a one-to-one. Start them on a one-to-one reward to risk, the same number in this box and the same number in this box. And then you can then build on that from a base. You've got a good base to build from if you've got a good success rate, around as close to 50-50 as you can get it. Better if it's higher. You know that when you adjust the reward to risk and make the reward higher than the loss, you're going to get stronger results. And as you can see, it was a little bit up and down, which we've spoke about in depth on this workshop. But it's giving you the ability to understand, that the relationship between reward and risk, and the relationship between your win-loss ratio as well. As you can see here, every trade was a loser, 25 pips. Every trade that was a winner, 45 pips. So there you go. You can see, if we look at page 2, 3 winners. Page 3, 1, 2, 3, 4 winners. So although the number and the frequency of the losing trades is higher, the winning trades, when they kick in, is much stronger. So guys, I'm going to just summarize now in a moment, but before I do summarize that, I just want to say something to you about this whole ethos behind Tekton. Is that Tekton is simple to use. It's a code-free algo trading, but remember, you do have to have a degree of education and trading experience and knowledge to be able to use it. Please don't think that you can cut corners and save time by not getting yourself educated. And it's for that reason, because you will get the most benefit from Tekton, that we've really reduced down heavily the cost of the Trading for Beginners workshop, which you can see on this forum under courses. It's been heavily reduced in cost purely for that reason, to give you access to it so that you can get yourself a solid education. It's in bite-sized chunks, easy to absorb, with downloadable material. So let's summarize this evening's workshop, and we'll take it from there. Okay, apologies for the abrupt ending of that last clip. I was just about to say we're going to go into a summary. What I want you to try and look at with regards to your trading is look at editing the algos that you're using and looking at working with the algos. Use the algos you're using on Tekton as a base. But remember the following things. Backtesting is no guarantee of future performance. Now, I know that's not really what you want to hear, but it's really what you need to hear, because anything you test in the past is no guarantee that it's going to do it again in the future. However, backtesting does give you a steer as to how your strategy or algo would have performed in the past, giving you the ability to estimate what is likely to happen in the future. For example, and let me use a real life situation as an example. If you've got Usain Bolt as an athlete and he consistently runs under 10 seconds for 100 meters 99 times out of 100, then the likelihood he's going to do it again for the 100th time. If he runs 100 meters in under 10 seconds for 50 times out of 100, and he's about to do the 100th run, and he's had 50 times under and 49 over, then the likelihood is less. It's all about what is the likelihood of what something is going to happen when a certain condition is met. And that's the beautiful thing about testing. You can change those parameters to give you the ability to look at other scenarios based on the current scenario. Might sound complicated, it isn't. It's just a question of understanding what algos are, what rules are, and what conditions are, so that you can then adapt them to suit your circumstances. No trading system will have or can have a 100% success rate. I've only ever seen one strategy that had a 100% success rate. And it was one that was running and running and running and running and running for a long time. And the drawdown and the pain that the person went through, he entered a trade on Apple stocks. He bought Apple shares. And they were going down, 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 down. Nearly lost his house over it. But he left it and left it and left it and left it. And eventually they came back round to get to a level just above where he bought them. Closed the trade, made a very small amount of money, walked away with a 100% success rate, one trade, one win. But the pain he went through to get there and the time it took was ridiculous. So remember, no trading system or strategy will have or can have a 100% success rate. If you trade without stop losses or with excessive risk management, you will go through emotional pain, you will go through drawdown, you will go through all sorts of horrible, nasty emotions. Use the edit facility in Tekton to optimize the algos you're working with. We've shown you how to do that today. Use the edit facility to, once you've got an algo, whether you've been sent it, you've created it, or you've copied it, or you've imported it, use the edit facility to optimize the algo you're working with. Don't just copy every single algo that's on our forum community and put it into your account. Because A, you're going to be over trading. B, you're going to be in situations where you'll have positions open on the same currency pair from different strategies. And C, you're going to be in a position where, yes, if those strategies or algos are in a bit of a negative period right now, because remember, nothing goes in a straight line, you're going to have a lot of drawdown on your account. So use the edit facility to optimize the algos you're using, whether you're using an imported one or a created one or a copied one, whatever that is. Use the edit facility. Remember, you can edit the instrument you're trading, the time frame, the stop loss, the take profit, and the algo itself, the settings. So if you're using a 50 EMA crossing a 200 EMA, you can change that to a 100 crossing a 300 or whatever. If you're using an RSI crosses above 32, change it to crosses above a 16. So you're using the algo and you're editing your algo to get different test results so you can see what happens when things change. Don't just rely on the algo as it and run with it, because you'll find it being tough. We've got one example at the moment, I'm not going to mention any names, that's not how I work, of somebody who's done that, who's copied just the algorithms that are on the Tekton community, and because one of them hadn't triggered because the conditions hadn't met, they felt that the algo hadn't been set up properly, and they set it up again. And then when it triggered twice, because you've got two versions of the same algo running. Remember, guys, if you are experienced as a trader, then you can learn how to use Tekton for free. There's plenty of videos and tuition workshops for you. If you haven't had any experience or much experience or still feel you need it, we've got the Trading for Beginners workshop, which has been heavily reduced in cost, heavily, to get you started. And I would strongly urge that it's only the cost of a lunch to actually get this, and it's a 4-hour workshop to actually get yourself up to speed as to what's going on. But don't just copy strategies and copy algos. Use them as a base. You can copy them by all means and import them by all means. But edit them. Test them on other pairs. Test them on other instruments. Test them with other settings. You may find you've got an even better version of it. And we have one client who joined us in the last week or two who's actually improved one of our strategies already. And one of the strategies that was actually sitting on the forum on dollar CAD, one of our clients in Africa, in Nigeria, I won't mention his name, not to want to embarrass him, but if you want to find out, it's on the forum, actually tested it with a different setting on a different instrument and got an even stronger return. So congratulations to you, well done. And you can see that for yourself on the forum. Finally, whenever you backtest, start off with a 1-to-1 reward to risk. So 25 pip stop, 25 pip target. 30 pip stop, 30 pip target, 15, 15. And the reason for that is because if you get a situation where you're very close to a 50-50 success rate, i.e. above or below 3,000 trades, 15-50 winning, 14-50 losing, whatever it is, as long as it's close-ish to 50% success rate, then you know that if you adjust the reward up and keep the risk lower, you're going to get a good successful risk to reward. That's the best way I do it. That's the best way I can advise you do it. Start off with 1-to-1 and work from there. If you get a huge drawdown, the ratio between the winning trades and the losing trades is so vast that it's not going to make much difference. Then I wouldn't even move on to that. Use a different instrument or change the settings. But if you get a very close to 50-50 success rate, then by all means use that as a base and build on from there. Let's go over and answer any questions that you may have right now following this workshop.